Good morning, everyone. I'm Catherine Ross with TheStreet. I'm here on the floor of the NYSE with Jim Cramer. Jim, what's going on with the markets?
Okay, we had a really good number today. It's why I favored the last rate hike, because I did fear that there could be higher wage inflation than 3. Didn't happen. We have great workforce participation. We have lots of jobs, obviously, because we're creating a lot of jobs at 300. It's a joyous time. That does not mean that it's therefore a dangerous time. We are not, my mother would have said, look, when you start carrying on like this, everybody gets hurt. This is not about parents and children, and it's not about the Phillips curve. What it's about is a new form of economy where people are getting jobs in all sorts of places. There are some minimum wage pressures. Obviously, there's because of immigration, we do not have a glut of employees. But I celebrate the fact that you can get jobs. I remember when I got out of college, there were no jobs. Okay, I had a folder recently when I gave my Bucknell commencement of 50 rejection letters. Now there wouldn't be that, and it's great because kids have been coming out of college, and you would know this more. Kids have been coming out of college in the last decade really have struggled. They live with their parents, they have big student debt, and there are not a lot of jobs. That's changing, and I would hate to see the Fed say, you know what, it's time that we make it so that there are fewer jobs, so that there's a pool of labor that's in excess again, and we can cut the wages. Because that's what they'll do if they keep tightening, particularly with the 10-year at 2.6. Look, if you're targeting employment, then you do need to tighten. If you're targeting inflation, you're fine.
All right, Jim, let's talk a little bit more about the Fed, because I know that Jerome Powell is going to give a speech.
Right, and we're up 500. I very much worry that what he'll do is, their new wrap. First, it was 3 hikes on October 3rd and 4th. Then it went to 2 hikes. Today with the Cleveland Fed person, Messer, it's 1 to 2. Why is it anything? Why isn't it, we just put through a rate increase. We want to see what it does. And what I find to be so disconcerting is only in the world that they're in, that really distant ivory tower world, would anyone really think, there's no consequences to what we do, so let's just keep tightening. And there are acolytes who believe in that. And I was taught by, I think, some of the greatest economists, Otto Eckstein, John Kenneth Galbraith. And what they taught me is no longer relevant. We're in a different kind of economy. We're in a shift economy. We're in an economy that is where every day a company comes up with something that makes it so you don't need people. We're in an economy where Amazon's going to get rid of checkers, which is which is a part of the economy that doesn't require you to go to comp sci. We're not, the fourth industrial revolution, as outlined by Mark Benioff in last year's Davos speech, is very much about what do we do with all the people about to be laid off. That hasn't changed. That's a secular story. The employment number is a cyclical number. These are different things.
Do you think that there could be a recession? Because
no, absolutely not. And I don't, one of the things that so many straw men are folk. First of all, let me just say on Twitter, I am not, if you listen to me, I clearly am not in favor of doing what I'm saying because I want higher stock prices. I'm saying fight the war with China, which is going to cut the GDP. I'm saying let them, teach them a lesson. That's going to cut the, look, if I wanted the stock market to go higher, I would say let's stop antagonizing China, because that would send the market higher. I'm not saying that. I'm not about stocks. I'm about protecting the working man, Main Street, and about the United States being a great power and not ceding hegemony to the Chinese. Those are the things that I'm about. Now, I'm 63. I have to speak my mind, or I'm never going to speak it. And none of those things I just described create higher stock prices. They create strength as a nation. But we cannot have the Fed at the same time tightening, selling its bonds, and having a war with China, and not expect a slowdown that will throw people out of work who just got jobs, except for in healthcare, where I think that there's an urgency to it.
You and Martin Bakradax are TheStreet's London bureau chief.
You're so good.
You guys choose every morning the real money stock of the day.
What we did today at 4:15.
Yeah, and why Chevron?
I picked Chevron because I think oil's bottomed. I know that that's counting. No one thinks that, but in the 60s, I said it's done. It's topped. In the 40s, everyone thought it was going to go to 30. This 44, 45 level is where we don't drill as much. We're not going to produce excess supply. The future, they're going to sell oil in the futures market. I think that oil's natural level is around 50. Thank you, Rusty Brazil, for helping me on this. And so therefore, Chevron is the one that is the most levered to the price of oil, that is a major with good balance sheet. I want them to go buy. Look, we own Anadarko, fractional alerts. They should go buy Anadarko. Anadarko's back to where it was almost when it was part of Macondo, which is really rather amazing. It's a very good company. But they haven't made any acquisitions. I want Chevron to make an acquisition. They're really good company, Chevron.
Can you tell me why, what's the process of choosing a real money stock of the day?
Okay. Look, Martin came and he was talking about doing CAT or Boeing because China did the stimulus that gives you $218 billion. I thought that was very good, okay? But then I looked at the oil futures and I said to myself, all right, oil has been, if you look at oil where it was on October 3rd, oil has led the market by about a day and a half. So that means that Chevron is the most levered to oil, so therefore that has to start going higher if I want to believe in this market. Not a 3M going to 188, not a McDonald's up 2 or 3. I need Chevron to go up. Now, right now, look, we have a big S&P rally, and you're seeing all the big cap stocks rally, and the market's up a lot. But if the market comes back down, I bet you Chevron's still higher.
Okay, so
I mean, in other words, I pick it because it's fascinating to me. And
I like that.
It's fascinating to me. And you know, one of the things when I started Stock of the Day, I said, I want to be wall-to-wall in the stock that fascinates me. I want to know everything, and we do that. You know, Johnson does other stuff that's fabulous, a great Netflix piece. But what I'm trying to do with the Stock of the Day is catch the fancy of the market. Like Exxon, I almost did. Why Exxon? Because it almost yields 5%. That's an accidental high yield. I have a piece on Real Money saying that's really rather incredible. I think Martin may be right in terms of Caterpillar because it's up a lot off of China. But Caterpillar's also a big cap stock, and the S&P is driving everything. And if oil goes down $1, we're going to be only up 200 on the Dow.
So Boot Barn rang the bell
I like
today.
this. Jim Conroy wasn't there. You know, the CEO apparently had some sort of medical emergency. Boot Barn, Matthew Boss' favorite, really a fantastic niche business. Millennials like them. They've got, if you go to the website, equal women and men, highest quality stuff, great franchise going regional to national. Many more people are interested in Western wear than people think, and it's also good for like what Tractor Supply is, and those of us who like to garden, those of us like to be outside. It's a good stock, and it's at an interesting price. And look, I'm glad, you know, companies ring the bell, and it's like, it's a really big deal for them. And you can see Boot Barn, we can just focus for a second, Mr. Cameraman, on all the boot behind you, you'll see. This is what I look at in the morning, and I say to myself, okay, I got to do work Boot Barn. I got to get the CEO on, and the CEO was not here. But the CEO made dog collars for me, for my dog. And, you know, I have the bug died. I've got the bug dog collar right there. It reminds me how great Bug was. Marley's pretty good. He ain't no bug.
Yeah, you can't replace
and
the
he's
dog
like a
that you
slither, you know, he can get under things. And when I throw treats at him, they no longer just go bank. Bonk. He opens his mouth
Really?
now. Yeah, he's not. And also what Lisa does, by the way, she's got him, when the food's out, she goes, stay, go. Love dogs. I love dogs.
That's kind of like the Doggist hasn't. I don't know if
Oh
you
my
know
God,
the Doggist.
right before we go to bed, we look at the Doggist every night.
Yeah,
The Doggist
his
is the
dog
greatest.
keeping Finn.
Isn't that the greatest
Oh, it's
sight?
so cute.
People should look at the Doggist. It's joyous.
Yeah,
I
it
follow
truly
a
is.
cat site on Twitter. I like cats a lot too. We had a cat named Iverson. He was a great jumper.
So I just have to have a moment here because the Cowboys are playing in the playoffs.
Yeah, I looked at that game. I think they're going to lose. I think the Seahawks are the hot team. I keep thinking about that Cowboy Colt game. By the way, I think the Colts are going to come out against Texans. I think the Chargers are going to come out, and it's going to be Chargers New Orleans. It's the Saints.
All right, and how do you feel about
Can't
those
beat
Eagles?
The Saints at home. Can't. 6.5 points worries me. When when the bookies are at 6.5, then you're going to have a running game, and we don't have a good running game. But we're hungry, and we're the team that's coming in the hottest, and nobody wants to play us. But I do respect the Bears D. What are you going to do? You going to watch all games?
Oh yeah, I'm going to go to a Cowboys bar.
Oh yeah. Well, I'm going to San Francisco next week for the J.P. Morgan conference, and my wife's furious with me. But I moved my plane from Sunday to Saturday, so I can watch the birds.
All right, well, good luck to you and the
Good
Eagles.
luck to you. And look, I have no animus against Dallas. And by the way, Tony Romo I regard as an acquaintance. My wife hates it when you say someone's a friend if you've only had a couple drinks with him.
All right, thanks so much for joining me,
Oh,
Jim.
absolutely.
It's been so great to have you
Read
back.
my Real Money piece because it's about the Dow baddies and the Dow goodies.
And it's pretty good. You have
Thank you.
McDonald's
Spent
in
a
there.
lot of
You've
time
got
on that one.
Yeah, so check it
I
out
spent a
on
lot
Real
of time
Money.
on that. By the way, I like the banks here.
Yeah?
Not for a trade, but we own Goldman, and Goldman's not going to be here 2 years from now. That stock price, it's just not going to. It's just mathematically not going to be there. I like
All
that.
right, yeah. Okay, thanks, Jim. Have a
Absolutely.
great weekend, everyone.